Today, we are witnessing something that is quite literally textbook in the world of finance. If you have been feeling like the market is coiling like a spring, you are not alone. We just got a massive data dump from Evernorth and a viral breakdown from analyst Archie that confirms that many of us have been suspecting, and that the supply of XRP is disappearing. We are not just talking about a few million here and there. We are talking about billions of tokens moving off the table. So in this video, we are going to dive into why the exchanges are draining, why 1.1 million wallets are suddenly hitting all-time highs, and what this means for the price as we head into the final days of this month of April. So, let's start with our first question about why did 7 billion XRP leave exchanges in a single month? But before that, let's read what Archie posted here on X. He stated here Evernorth says it loud and clear. Supply shock coming for XRP. The largest public XRP treasury company just dropped a banger thread and it's straight fire. So, the headline numbers are staggering. According to the latest Evernorth data, February 2026 saw over 7 billion XRP withdrawn from exchanges. This is the largest monthly outflow we have seen since late 2025. So my personal opinion about this is you have to understand the psychology behind this. Investors don't move 7 billion tokens into private wallets if they are planning to sell next week. When you see a drain this massive, it tells me that the big fish are preparing for a long-term hold. They are taking their chips off the table so the house can play with them. To me, this shows a massive vote of confidence. They're moving XRP into cold storage because they believe the current price is a bargain compared to where we are going. It is a complete shift from trading to positioning. The next question is, are large holders really accumulating 11 million XRP every single day? It is not just the supply is leaving, it's that the whales are actively buying more while it's happening. The report states that the large-scale holders are adding an average of 11 million XRP to their bags or wallets every single day this April. So my personal opinion about this is that think about the pressure that puts on the market. Every day, 11 million tokens are being locked up and removed from the liquid supply. When you have that kind of consistent buying pressure from the top, it creates a floor that is very hard to break. These big entities aren't gambling. They are likely front running the institutional utility we have been talking about with the Clarity Act. They know that when the supply gets this tight, even a small increase in demand can cause the price to explode. The next question is, why is the retail middle class hitting all-time highs? This is perhaps the most interesting part of Evernorth data. It is not just the giant whales. Mid-tier wallets, those holding between 1,000 and 100,000 XRP, have reached an all-time high of 1.1 million wallets. My personal opinion about this is that this is what I call the retail middle class of crypto. These are the disciplined investors. They are not the moon boys looking for a quick 10%, and they are not the giant banks. These are people like you and me who understand the long-term utility of the XRP ledger. Seeing 1.1 million wallets in this bracket tells me that the distribution of XRP is becoming much healthier. It is not just concentrated in a few hands anymore. It is being held by a growing base of committed believers. This makes the entire ecosystem more resilient and less prone to whale manipulation. So, what happens when liquid supply meets a demand spike? Archie frames this as a textbook supply setup. We have two things happening at once. Exchange balances are dropping, meaning less XRP is available to buy. And accumulation is increasing, meaning more people want it. So my personal opinion about this is that this is simply basic economics 101. If I have 10 apples and 10 people want them, the price is stable. But if I move 9 of those apples into my basement and suddenly 20 people show up wanting to buy, the price for that last apple is going to go through the roof. That is exactly what is happening with XRP on exchanges right now. The sellable supply is hitting a wall. We are reaching a point of liquidity exhaustion for the bears. When the new drops, whether it is a big bank partnership or a legal win, there simply won't be enough XRP on exchanges to satisfy the demand. So, is XRP finally moving from speculation to scarcity? For years, people argued that XRP could not have a supply shock because the total supply was too large. But the on-chain data is proving the skeptics wrong. So my opinion is that we have to stop looking at the total supply and start looking at the available supply. If 7 billion tokens leave in a month and millions are added to private wallets daily, the circulating supply on exchanges becomes very thin. I believe we are entering a new era for XRP where it will be treated like a scarcity asset, much like Bitcoin was back in 2020 before its massive run. People are realizing that in a world of tokenized assets and instant settlements, XRP is the oil that runs the machine, and nobody wants to be caught without it. So the next question is, what should we watch for as we close out this month of April? With April coming to an end, the combination of the Clarity Act news and this exchange drain is creating a perfect storm. So my opinion is that my eyes are glued to those exchange balance charts. If we see another massive withdrawal this week, it confirms that the supply shock is accelerating. So don't be distracted by the short-term price fakes. Look at where the tokens are going. They are going into strong diamond hands. So the setup is done. The stage is set. We are just waiting for the spark to ignite the fuse. So keep your head clear, watch the data, and remember, scarcity plus utility equals a very interesting 2026. And this finally ends our video. Thank you very much for watching and see you on the next one.